Hi, everyone. Thank you for joining us for another eMarketer Tech Talk, where we host guests of all areas of ad tech, martech, and media. I'm Nancy Tefera Santos, Senior Vice President, eMarketer Insider Intelligence. Today, we're going to hear how to gain market share for your brand. My guests are going to help you understand the competitive analysis skills that you need to respond to consumer behavior shifts. This is your opportunity to learn. We want it to be educational, so please submit questions in the chat. We'll get to as many as we can during the Q&A, so please keep them coming. Now I want to introduce my two guests from Similarweb. I have with me again, Chloe Nichols, Product Marketing Manager, and Nathan Platnick, Senior Industry Manager of Retail and CPG. Chloe and Nathan, thank you for joining me today.
Thanks so much for having us today.
Yeah, thank you.
Absolutely. It's great to have you back. And Nathan, I'm going to throw it on over to you to get started.
Great. Good morning, folks. So just a brief overview of what we're going to cover today. So we're going to start with talking about why in 2022 there's so many challenges when it comes to trend spotting. Then we're going to dive into a couple of FMCG and retail trends to watch, ones we've identified using our data that we think are going to be big growers in 2022. Then I'm going to hand over to Chloe, who's going to talk about how we maximize digital growth with trend analysis, and then finally, how we use Similarweb to spot trends over time. Finally, we'll hand it back to Nancy for a few quick key takeaways and a Q&A. Great. So first, let's start by talking about just why trend analysis in 2022 is so difficult. First and foremost, markets are changing faster than ever, and trends are incredibly fleeting. The nature of a trend has always been something fleeting, but in 2022, with the overwhelming amount of digital signals, products, content at our disposal, trends move faster than ever. Hand in hand with that is a more demanding, fickle, and specific customer base. When we look into some CPG products in just a moment, we're going to see how much consumer behavior is trending towards hyper specificity in search, demanding very specific sets of product features, and looking for very specific brands. Digital signals can often provide overwhelming and noisy data. I think we've all had the experience of being very excited to check out a new data source, only to find that it is full of so much noise and so much external influence that it's almost impossible to rely on. We also just have an overwhelming quantity of dashboards, data coming in at every moment, making it very difficult to separate out what's a key trend and what's something that's going to die in just a few months. Categories are growing more competitive and more nuanced. This goes hand in hand with more demanding and fickle customers, right? They're seeking more specific products, and in turn, brand competition has increased, categories have gotten more specific to cater to consumer trends, and buying journeys have lengthened considerably as we've seen increasing amount of cross-shopping, co-browsing, and retailer comparisons as users hunt not only for the best price, but also for the best product. Lastly, traditional market research can't keep pace with evolution. We're going to talk about this in just a second when we talk about how folks usually think about going about that trend analysis process. But when we look at traditional market research, we just see data that is often out of date, trends that are often not data backed. So the question becomes, with consumer behavior changing online so constantly, how can you measure the pulse of your market and stay relevant? I think it's really interesting to take a look at some of the predictions we've made, some of the really great data backed predictions coming out of Similarweb over the last year, and talk about why, even in the best of circumstances, it's so crucial to be constantly evolving your trend spotting methodology, and also constantly looking for those new trends because they are changing rapidly. So each year we do an exercise called the Digital 100, where we flag our top 100 brands across a number of industries that we believe are going to have a banner year the following year, right? So in 2022 and 2021, about 1/3 of those brands actually declined immediately after we put them on that list, right? Another way to think about this too is we also keep a running list of our top trending keywords in each category. So when we look at those CPG keywords, only about 30% of those CPG keywords year over year actually grew or increased search volume, right? These are the keywords that we've identified as saying, this is an upcoming trend, this showcases increased consumer demand, and about 7 times out of 10, those keywords actually end up cratering in demand just a couple months later. So the bottom line is between 3 and 7 times out of 10, according to our math, right, your prediction is going to be wrong. So how do we kind of try to solve for that? So looking at the historical ways, and this is what we've heard from customers. We've heard this from small businesses all the way up to Fortune 500 companies. One of the first places they start for trend analysis is Google Trends. Why is that data really hard to action on, right? It's directional and it's indexed, which makes it really difficult to compare trends across markets over time. That data is often very vague and hard to act on, right? You get a couple of key trending phrases, you get a little bit of geographical data, but it actually doesn't really encompass all that much. Lastly, right, we're limited just to Google search. I think as most of the folks on the call today probably know, right, about 50% of searches in 2022 are likely going to originate on Amazon and other retailers. So if you're looking just at those Google search trends, you're only really getting half the picture, if that. Secondly, we have our traditional market research and news media. Obviously, a ton of issues with utilizing those exclusively for trend analysis, right? Often the takeaways are subjective and very high level. In a lot of cases, those trends aren't heavily data backed. In a lot of cases, you'll dig into the trends being put out by a market research firm, and you'll see that it comes from a survey panel of just a couple of hundred folks. Finally, it's often not actionable, right? It may tell you which categories are growing, but it doesn't necessarily tell you how to play harder in those categories or how to reach increasing market share. So lastly, we have digital research intelligence and a tool like Similarweb. So we are able to, right, we take all of our trends and we run them through a rigorous analysis to ensure that they are data backed by real consumer behavior. Secondly, we touch all points in the funnel, which includes not only that Google search behavior, which we're going to dive into in just a minute, but also search, product, category conversion rate, and trends across all key retailers. So we can actually track that journey across all touch points. Finally, we also include a wealth of historical data to ensure that all of our trends are within context. So market analysis is critical to maximize growth opportunities. So today we're going to run through some ways that you can analyze your landscape, size your market, combine that data, and combine the wealth of data signals you have at your disposal to actually accurately track market trends. So I like to think about this framework when we think about where we want to start with identifying trends. So as mentioned, right, in a lot of cases, folks are just using that Google search volume, looking at that demand and deciding that that constitutes a trend. And when we think about trends here at Similarweb, we want to make sure, as mentioned, we are touching all points of the funnel. So that's going to include those offsite signals, primarily search volume from Google, as well as the means to identify where that traffic is going, shifts in that traffic over time, as well as similar data signals coming out of retailers, primarily Amazon, but also including retailers like Walmart, Target, and specialty retailers like Chewy and Best Buy. So we start by identifying and verifying our trend, a similar process across platforms, which involves looking at historical search volume, as well as understanding how users are searching. Is search in a given category overwhelmingly branded? Is it product oriented? Or does it more focus on answering how-to questions? Is this a category where consumer education is really key, or one where folks tend to know what they want? Then we try to understand how we can size up the market and understand our competition. When that comes to retailers, we look at trends around trending products, trending brands, and shifts in the category landscape over time, including overall category growth, to get a sense of, is this a trend that not only there's consumer demand and interest for, but it's translating into dollars spent? When we look at our offsite signals, we use trends coming out of Google to understand when there's increases in search volume for a given keyword that we think may be a trend. How do we identify what sites, what brands, what content publishers are competing for that share of voice? Lastly, we ensure that we understand our audience as well. On retailers, that involves including things like co-browsing behavior to see which brands are frequently compared and cross-shopped. We look at the demography of brands and categories to understand how that may be shifting over time. And we look at things like loyalty, retention, subscribe and save, and purchase behavior to really ensure that we understand not only what the trend looks like, who the current winners are, but who the actual shoppers are. We do that similar process also on our offsite channels as well. So we look at traffic sources, demography, and browsing behavior to really ensure that we have an understanding of the audience at every point in the funnel. So now I'm going to jump to some actual trends. I'm going to call out just a couple up top, and then we'll go into the data backing a few as well. So first and foremost, we see a huge trend for 2022 is that premium brands will really drive Amazon's growth as shoppers are shifting away from cheaper labels. Amazon has historically been thought of as an ecosystem that prizes low cost and convenience to consumers, but we're increasingly seeing premium brands, especially in the CPG space, have a huge right to win. This is going to pose a big challenge to our digital native D2Cs. We think of our brands like native companies competing in the deodorant space, who are now facing a tremendous amount of increased competition coming from Amazon, as well as our kind of high-end specialty retailers like our Sephora's. Partnerships are going to be the lifeblood for digital native D2C, but without a key differentiation strategy between your brand.com and your retail channels, you're going to see a huge cannibalization effect. Personal care products are becoming increasingly less gendered, while some products like cosmetics, personal grooming items are seeing growing interest from men, including rapidly increasing search volumes for very specific makeup terms, specifically for men. Large-scale CPGs are going to scale back their homegrown D2C efforts, which is going to create more white space for smaller brands and acquisition opportunities. What we saw in the past few years is a huge emphasis from large CPG enterprises, your Unilevers, your Procters and Gambles, on building out a D2C portfolio, right? These large-scale CPG enterprises are really desperate to wean themselves off of Amazon to find alternative distribution channels. And one of the methods they've found to do that is to create their own digital native seeming D2C efforts, right? So launching new brands, creating something that feels very of the moment. But in a lot of cases, we dive into that data, we'll actually see that those D2C efforts are really, really struggling, and without more support from these enterprises, may die off entirely. We're also going to look at subscribe and save lock-in. So I think for many categories, specifically in the FMCG space, subscribe and save has been kind of the holy grail. We've seen a huge number of businesses, your Quips, your Harry's Razors, your Dollar Shave Clubs, that have really been designed around the notion that folks want replenishable products shipped to them on a regular cadence. What we see when we look at our retail channels, though, is that is increasingly not the case. Coming along with this new competition, coming along with the increasingly rapid pace of change for trends, we see that folks don't want to be locked into specific products or brands over time. And subscribe and save lock-in remains extremely low across core CPG categories. Spending on sustainable products is increasing. Obviously, we've heard a ton about sustainability as being a core factor in kind of the buying journey for customers. But we don't see yet is a tremendous amount of folks who are actually making purchases based on those sustainable terms. We see growth in the revenue for those products, but we don't yet see that being a core consideration factor as folks are going through the buying journey. A great trend that Chloe is going to spend some time touching on is the growth of perishable revenue on Amazon and the corollary growth of the grocery space online. We've seen a 45% increase in the revenue from perishable goods on Amazon over the last year, which indicates a huge growth in adoption for online groceries, especially those items that folks haven't been habituated to buying online before. Lastly, without using data to get smarter, brands are going to have a really hard time growing their assortment, or they're going to risk becoming one-trick ponies. I think we are all familiar with those D2C online brands that have launched with a great single product that then try to expand to a huge number of product categories that they don't have a great fit in, and they end up wasting a lot of money chasing after a product and a category and a consumer that may not exist. All right, so now diving into the data underlying a couple of these trends. So first, I want to talk about the importance of creating a differentiation strategy between your retail partners and your brand-owned D2C. This has been a huge challenge for brands in the CPG space because if you are offering a product on Amazon and you are offering an equivalent product at a worse price with worse shipping and fulfillment times coming from your brand.com is going to lose 10 times out of 10. But what we see is a brand that's actually taken a really smart approach here and has managed to grow their conversion volume and conversion rate across all of their core channels, including their brand-owned D2C and retail. So the brand here is a brand called Liquid IV. They sell what's effectively a little Pedialyte pack that you pour into your water. So what we see when we look over the last 3 years of Q1 data, what we see in the light green is the conversions coming from their brand.com. What we see in the orange are their unit sales on Walmart, and lastly, their orange sales on Target in the blue there. So we see kind of non-existent traffic to their retail partners in 2020, a little bit of conversion volume, but still quite low, and only about a 5% conversion rate on their brand.com. In 2021, we see this massive growth for their retail channels. And when we get to 2022, we see that not only have they increased their conversion rate on their brand.com over the last 2 years by almost double to around 11%, but they've also managed to grow their performance across all three channels, right? Brand-owned D2C performance up about 37%, nearly 200% improvement in unit sales on Walmart year over year. So massive growth across all three channels, as well as a growing conversion rate for their brand.com. So how have they managed to do this? And the key here is assortment differentiation. What they've managed to do is they sell their smallest pack sizes, their 3 packs, their smaller 10 packs on their retail partners, but not on their brand.com. On their brand.com, they offer substantially more customization opportunities, as well as larger, cheaper pack sizes. What this teaches a customer to do is to use those retail channels as an acquisition vehicle, right? Maybe they find the product in stores and then they continue to buy it online. And then if they become a loyal customer, what they'll soon realize, right, is they can get a better deal on larger pack sizes with more customization if they use that brand-owned D2C. So they've created a differentiated retail strategy that actually helps to float all boats. Moving into some trends around premiumization. When we take a look at a number of FMCG categories on Amazon and we break down the unit sales by price, what we see is a massive increase in the performance of the top end of the price spectrum and a huge bottoming out of that low end, right? As mentioned, I think a lot of folks still think of Amazon as being the marketplace for lower cost products, cheaper products on a discount. But when we look at these CPG categories, what we see is the opposite effect occurring. So in the dark blue here, we have our kind of cheapest products, right? Our sub $10. Here we're looking at shampoo, but this is a trend that holds true across any FMCG category we've taken a look at so far, particularly in the personal care space, but increasingly in the home care goods space as well. So in that blue is going to be our sub $10 shampoos, our cheapest, our kind of drugstore brands. And in this light blue up top, we have our brands that are selling for about more than $25 per unit, right? So what we see is about a 10% increase in the percentage of unit sales from those ultra high-end products and about a 20% decrease over the past 2 years in unit sales from those low-end products. So we're seeing this increasing polarization. We see some growth for that kind of midpoint too as well, but the largest growth and the largest increase in dollars is obviously coming from those most high-end products. So as mentioned, right, this is going to pose a huge challenge to some of those trendy digital native D2C brands, which have staked their claim on that kind of premium CPG space. But if Amazon is starting to swallow up those products as well, we anticipate to see the growth of a ton of Amazon and retailer native high-end CPG brands, as well as a huge growth in the number of digital native D2Cs who are needing to embrace those strategic retail partnerships and bring those products to retailers. Shifting over a bit to talk about subscribe and save penetration, right? As mentioned, this has been the holy grail for CPG brands over the last few years, is getting this replenishable product on a recurring revenue basis. But what we see over the past year or so is actually a huge decline in the percentage of orders on Amazon that are coming from those subscribe and save brands or subscribe and save products, right? So about 31% of dollars spent in Q1 2021 in home care and about 13% of dollars spent in personal care on Amazon. In categories that are, thought to be replenishable. You see a couple that I've called out on the right. Right, these are things like razor blades, laundry detergent, paper products, and we actually see that percentage go down and down and down over the course of the year, almost down about 8% year to date. And we see that similar big decline of about 5%, especially when we look at kind of later on in 2021. We see that pretty massive decline in subscribe and save lock-in. So while this may be a holy grail for a lot of brands, it's really not quite there just yet. Folks do not want to be locked in. And if we look at some of these core replenishable categories, razor blades, OTC, dropping by more than 5% in terms of revenue coming from subscribe and save year over year. This is a little bit of an eye chart, but I promise the data is really great here. So I want to dive into this for just a few minutes. So what we see here is a list of small digital native CPG brands, or at least what appear to be small digital native CPG brands that are actually owned by some of our largest CPG enterprises. So, right, one of the trends we called out just a few minutes ago was looking at how these D2C brands that have been launched by our largest CPG enterprises have really struggled to gain traction and have really struggled to grow traffic. So we have a couple of brands here, some which have been bought, like native companies, and some of which have been built internally, like an EC30 or a Zevo Insect from P&G. So here in this first column, what we're looking at is this Q1 2022 traffic to these sites. So we see most of them are relatively low volume, only a handful really cracking that 1 million visits over the course of the first 3 months of this year. And what we see in this second column is a ton of year-over-year declines, right? We see a handful of brands like Kindra, like EC30 Clean, which have managed to grow traffic pretty substantially, though in a lot of cases, these brands were in a little bit of a pre-launch state last year, so that traffic growth is anticipated. But for a number of these, which have been around a little longer, you're actually seeing something like a Dollar Shave Club or Gillette even having a huge drop-off in traffic year over year. And one of the causes for that is that these enterprises are slowly pulling back support for paid traffic. So we see across the board, these brands have an incredibly high volume of paid traffic coming to their site, which means they require a tremendous investment to drive traffic to. I'll draw your attention to some of the brands in the PepsiCo portfolio. So snacks.com was an effort by PepsiCo to aggregate a number of their snack and drink brands into a single D2C commerce hub. to really circumvent large grocery players and particularly Amazon for a lot of these shelf-stable products. So when we take a look at that paid traffic number, about 9% of the traffic coming into that .com is paid. This number was exponentially higher about a year ago. They were paying for substantially more traffic, a huge investment in paid search and display advertising. Once we see that investment trail off, we see that almost 75% decline year over year in volume of traffic to the site. In a lot of cases too, these sites are relying almost exclusively on branded traffic. Even for some of our larger brands in the space, north of 70, 80, 90% of their traffic is coming from branded terms, which indicates to us that they have very little right to win on any sort of organic search. They're not, developing great content that's driving traffic to their site. They're not well optimized even necessarily, which means all they can do is hope that folks are searching for their branded keywords, or they can pump a ton of money into maintaining these presences. So we anticipate that this is going to trail off pretty substantially in the next year or so in terms of large CPG enterprises making these big investments. Two more quick ones to take a look at. As mentioned, right, we've seen a relatively low volume of dollars spent in the green and sustainable space, though it's growing quite rapidly. So I'd point out paper supplies in particular growing about 52% year over year, as well as some large growth, but small dollars spent in something like deodorant and antiperspirant, which was one of the first core CPG categories that's a big influx of sustainable products. So we also see a little bit of that growth in laundry and shampoo as well. So I think the interesting thing to note here is this doesn't include any search volume data for those green and sustainable terms. And the reason is not because we don't have that data. The reason is because those search volumes are so low as to be almost insignificant. So what that tells us is even though these products are growing in terms of consumer willingness to spend, there tend to be more expensive products, and there's more offerings in all of these CPG categories, what we actually see is a relatively low interest in shopping on those sustainable terms as kind of a key product differentiator, right? So very low search volume for green, eco-friendly, sustainable terms, but growing actual purchase volume for these. I'm going to talk about one last trend, which I teased up top, which is the growing interest in makeup, fragrance, shaving and hair care products coming from men, right? In a lot of these categories, and shaving and hair care, we're not including things like razors and blades. But in all of these categories, we're seeing a massive influx in interest from men. So if we take a look at something like makeup, right, and we look at the search volume on Amazon and other retailers, we see that searches for products like concealer for men are up almost 75% year over year. Fragrance for men, right? We see about 22% of searches in the fragrance category are now coming from men. And we see about 1,000% increase in searches for eau de toilette for men. So a huge growth of interest from a new customer base that has historically not been particularly interested in makeup, fragrance, and hair care products. And when we look at that search volume coming off of our core beauty and CPG retailers like an Ulta, we also see that those searches are up about 1/3. All right, so thank you all for taking a look at some of these trends with me today. I'm going to hand over to Chloe, who's actually going to walk through the process behind going and getting some of this data and using it to make those analyses.
Yeah, thank you so much, Nathan, and thanks so much for sharing those insights. It was jam-packed full of information. So for anyone who's taking notes, don't worry, the session is being recorded and we'll be sharing the link with you. So in the next couple of sections, I'll be digging into these further and showing you how you can use a tool like Similarweb to understand your market landscape and why trend analysis can be a key driver for digital growth. So when it comes to trend analysis, when using Similarweb, there's a couple of different objectives that our customers use it for. So we go to the first one that is around using trend analysis to measure the pulse of your market and understand those trends over time, to basically making decisions about how to maximize your share of the market. So this can be achieved through increasing market share or sourcing new growth opportunities, such as launching into new markets, or even spotting consumer trends that are on the rise. Using Similarweb data, you can identify those macro industry trends, and you can also look at the historical data and seasonal trends over time. Secondly, the other way that our customers use us and use those digital insights is for short-term tactical goals. So when you're responding to market demand or consumer behavior. And the main objective here is to really increase the share of voice when you're understanding what's a specific trend is happening within your industry or market or your category. And also just by understanding what's on trend in your market generally, so you can use this data to inform your growth strategy. So our customers use Similarweb insights such as search interests and question queries to really identify those emerging trends and topics of interest, so that they can make better and faster decisions on how they can actually adapt their strategy. Next up, I'll unpick some of the trends that were spotted earlier by Nathan. And this is really to show you how you can do trend analysis using Similarweb. I've chosen just a couple of trends that were highlighted around the online grocery market and also the men's grooming category. And I'll deep dive into these and show you how you can use these insights to go deeper with your trend analysis. So as Nathan mentioned, based on the data and the insights from Similarweb, Amazon grew by 45% year on year in 2021 for the perishables market. And it really indicates that there is a change in market demand and behavior for the online grocery market. And this could be an area of potential growth. Here we can see a snapshot of the top 100 grocery brands in the United States of the first quarter of this year. And when you compare total visits to Q1 in 2020, you can see that there is a big jump from 546 million to about 788 million. So this really represents the consumer demand for this category, and having this data to hand means that you can really validate that increase in traffic for these websites and understand whether the market is growing. It's really useful when you're planning your investments and resources in a specific market. And you can also use the data to see a breakdown of the related categories, which is visited within your market. So this really gives you a fresh view with up-to-date information right at your fingertips. You can also use industry trends to really get a bird's eye view of the market dynamics and which players are gaining or losing traffic share over time. So here we can see the top brands in the grocery market and how the traffic share has changed over time during the last 12 months. Here, the market leader, Kroger, dropped 1% share by 1%, with Instacart gaining traffic share by 1%. So that doesn't sound like a lot, but actually 1% is quite a drop when you're considering how big the market is, and Amazon's perishables has grown by 45% year on year. So relative to the market, it's actually quite a meaningful change for this market leader. You can also use market trends to identify those fast growth players. So those are potentially ripe for acquisition or potential threats by looking at that month-over-month change to discover the niche players disrupting the market. For example, we can see Butterly, a platform for brands to acquire and engage advocates for ratings and reviews. It's increased its traffic by 600%. So if you're a retailer or a CPG company, it may be worth looking into this company as a potential partnership channel for your growth. We can also look at audience loyalty metrics and comparing these from 2020 to 2022. You can see that Kroger's share of exclusive customers has dropped by 2%, where Instacart has increased by 2%. So when doing trend analysis, understanding the audience behavior changes over time is crucial when you're evaluating customer attention and maximizing your share of the market. And as I mentioned earlier, you can use search interest to get better understanding of how real consumers are searching for topics on the web. And that's really a pivotal part of your trend analysis. So here we can see that the retail giant Walmart is capturing almost 30% of the keyword traffic related to grocery delivery search terms, which is well above the other market players such as Kroger and Amazon. And you can also see that the search volume is around 270,000. Which is based on the monthly average over the last 12 months. And this gives you an idea on the market demand for the topic, plus the seasonal peaks where the online grocery increases or decreases over time. And these insights can really inform which players are capturing share of voice for a specific search term, and how you can plan your strategy for specific months of the year based on search volume and trends. Finally, when you're looking at conversion data, there's no denying that Amazon is a clear winner when it comes to on-site conversion, with Amazon's grocery and gourmet conversion rate 37% above the market average. So having these insights on conversion and bottom of the funnel metrics to really compare and contrast within your market is crucial when improving your on-site conversion strategy and just basically benchmarking your performance. Next up, I'm going to dive into the men's grooming category, which Nathan identified as a growing trend based on Ulta's search for men's grooming, which actually increased by 33% year on year. So here we can see the distribution of males versus females for the top 100 sites in the beauty and cosmetic market. And what we see here, it's really interesting. It's actually shifted from the last year where the split was 75% female and 25% male visitors. So that's been a steady trend for the last 2 years. But if you look at the data from January this year, you can see that the split has actually increased by 2% of male visitors. And also looking at Ulta's audience, the site attracts the younger audience from 18 to 24 and 25 to 34-year-olds based on the market average. So this shift in males versus females and this increase indicates that there is a trend towards men visiting these sites more often, particularly since the start of 2022. Also using search trends within the beauty and the cosmetic industry, we can see that the latest search trends in the last 12 months include best cologne for men and branded searches such as Coach and Calvin Klein. So this fresh data can really help you identify which topics, keywords, and search interests are trending at the moment. So you can adapt your strategy and see which products or brands are generating the most demand. Further to this, you can also use these insights and data from Similarweb to really analyze the trending keywords and topics for top publications that are relevant to your target audience. And this gives you the insight into how various search interests, topics, question queries are gaining traction. So here we can see GQ, which was one of the leading players for best cologne for men, is also capturing the majority of traffic share for these search terms, with 40% in gifts for men and also almost 80% for the best cologne for men. So armed with these insights, you can use this data to really identify potential media partnership opportunities or new ways to engage with your audience based on what they're searching for across the web. And it's not just through search interests that you can evaluate which products and categories are trending. So we also have this very unique way to see which product lines are gaining traction within your market. So you can see which players are capturing traffic share for a specific line of business. So here we can see the different men cologne sections of Bath and Body Works, Sephora, Ulta, and Bridie. And during the last 12 months, you can see those traffic trends for each product line over time and where it peaks. So for example, you can see that Bath and Body Works generate almost 300 unique visitors during Black Friday last year. And that's compared to the other players in the market. So having this insight on which products are trending over time can really help you improve your overall strategy. And whether you're benchmarking your product performance against other competitors, or you're just trying to understand who is winning the traffic share for your specific product line. We can also see that Bed and Bath Works capture almost 40% of the visitor share for the men cologne category, and that's compared to other market leaders. So again, with this knowledge and insight, you can track these trends over time to really see how the audience behavior shifts based on those seasonal trends within your market. And that just gives you a couple of ways that we've used Similarweb to do more than your high-level trend analysis. I'd love to just recap today's session and talk about a little bit what we've covered. So as you heard earlier, Nathan's presentation, there's key challenges when keeping track of what's happening in your industry. So given the market dynamics, it's really hard to stay up to speed as it evolves. And that's why platforms like Similarweb can really help you remove those digital blind spots when it comes to understanding your market landscape, how to size those opportunities, and also analyze consumer behavior. And since your market is always changing, you need to stay on top of those trends so that you can either set those long-term strategy or really respond quickly and react to consumer trends as they happen. If you'd like to learn a bit more about how you can use trend analysis for yourself, you can download one of our reports or sign up for the free trial, or even just try it out for yourself and request a demo, and we'll be very happy to give you a personalized walkthrough. And you can start trend spotting today. So Nancy, I'm really interested to hear about those key questions and what's been coming in from the folks online today.
Absolutely. Chloe, thank you so much. Chloe and Nathan, this was great. I really enjoyed this presentation. You know, the market is becoming so disruptive. We recently have a report coming that just launched about D2C natives versus traditional brands, and how traditional brands are really being able to come back. Retail media networks are exploding. The CPG category is just absolutely crazy. We have some numbers. 30 billion was spent on CPG in 2021 and digital advertising. That's going to go up to 41 billion in 2023. So being able to look at all these trends and really analyze, you know, what's driving these purchases, where the competition is coming from, and where to spend your money smartly is so important. So thank you for sharing this with our audience. We really appreciate it. And so did they, because I have some great questions. So here we go. You talked a lot about Amazon, and actually, Chloe, I think you mentioned grocery in particularly on Amazon has like a 37% conversion. That's huge. You know, what about the other marketplaces? What kind of trends do you guys see there, and how do they compare?
Yeah, it's a great question. Typically what we see is trends have started to kind of emanate from Amazon. So usually what we'll see is, right, because it's such a great platform in terms of surfacing consumer demand, we see in a lot of cases these trends start on Amazon and spill out onto some of the other retailers. A couple of interesting dynamics we've seen on something like a Target is that kind of Target as a brand has been very eager to fold in a lot of these D2C players. They've been one of the first to kind of bring some of these D2C brands like Harry's into the retail space. So that kind of mentality of supporting those small brands has really shifted over to their online environments. You'll find a lot of those kind of indie, smaller D2C natives there. I think in general, what we also see is, you know, we're pretty bullish on the strength of some of the specialty retailers in terms of, you know, a Best Buy, a Sephora. They're going to have an easier time kind of competing with Amazon in the long run because they do have a little bit more of that kind of right to win. They have a lot of kind of brand equity and a lot of consumer awareness. Those Walmarts and Targets and some of the kind of big box players that have, you know, tried to really step up their e-commerce performance, those are the brands that we expect to see kind of struggle a little more because they're not going to be able to compete on things like price. So trends kind of emanating out of Amazon, but also, you know, Amazon swallowing up a lot of that ecosystem simultaneously.
Interesting. Thank you. And so when looking at the trends, what are some of the key data points you consider when forecasting?
Yeah, so I think I can take that one. Hopefully in today's session, this has helped you get a better idea of the type of metrics that you'd be wanting to measure and analyze trends in your market. But just to recap some of the ones that typically our customers are using when they're looking at trend analysis, is they're really looking at those macro trends within the industry. So changes over time for total visits, unique visitors, which players are gaining or losing traffic shares. So really looking at who the winners and losers are within their market. And as I mentioned, those historical trends and seasonal trends over time. And that really gives you a better picture of how the market is shaped, how it might be recovering, and where it might be going next. It gives you a bit of an indication in terms of how you can anticipate that before it actually breaks. So just having that year over year, month over month, historical data is really important. As you saw in some of the presentation, you wouldn't necessarily know the market's grown unless you have the historical data. Other metrics that I think also add value in trend analysis is obviously the search volume and keyword interest data, which isn't just within the Google search, but as Nathan mentioned, we also have that data across our retailers as well. So this can really help identify those trending products, those topics, and those categories that really are bubbling to the top, and you can use that. You wouldn't get it elsewhere unless you have that understanding of what's happening within the wider market landscape. And finally, demographics and audience insights to layer on top of that. I think just being able to see that change in behavior is really, again, really important for trend analysis, and it helps, again, build a much richer picture of what's happening in your market.
Fantastic. And so let's talk category specific. We have a question saying e-commerce penetration has varied category to category. Are there categories where the penetration has been slow or stagnant where you really anticipated growth? In other words, what category surprised you?
Yeah, no, it's a great question. I think what's really interesting here, and I touched on this a little bit, is going to be those luxury categories. I think particularly high-end apparel, obviously, during the last year or two, we've seen the closure of a lot of our kind of largest legacy high-end apparel retailers. Our Barney's went away, I think, about 2 years ago now. So seeing a lot of those kind of retailers contract makes me think that actually that market is going to grow quite rapidly. And consumer willingness to buy those products online is going to go quite rapidly. I think another one where e-commerce penetration is really skyrocketing is going to be in the high-end jewelry space. We've seen the advent of brands like Blue Nile, which have really been at the kind of forefront of the synthetic stone kind of category, and they've had a tremendous amount of success. And it's a relatively new category, but I think that's another one where, as we kind of see this increasing consumer willingness to buy some of these more expensive and high-end and high consideration products online, those are the ones that are going to grow quite quickly in the next year or so, in addition to some of the ones we've called out today, like grocery, which I think had a banner year in 2021 and 2020, or 2020 fell a little bit back down to earth in 2021, but I think that kind of pandemic shift of folks becoming more habituated to buying those products online, I think that experience isn't going anywhere, and it is only going to grow as we see from that kind of massive increase in perishables revenue last year.
Yeah. Interesting that you say that. I've seen for myself here how the jewelry and luxury has really grown. A member of my team actually got engaged recently and bought his diamond online, and I was so nervous about it, and it came beautifully boxed, letter of certification and all of that. But it was such an experience, and it was fun to kind of be a little bit of a part of and watch it all happen. But yeah, people are really shifting their buying behaviors. It's very interesting what folks are feeling comfortable buying online. Another question we have, can you share a real use case of a client or customer using Similarweb to spot their trends and take action and gain real results?
Yeah, I could probably take that one. Actually, a story that springs to mind is Walgreens Boots Alliance. So they're one of the world's largest retailers and pharmacy brands. So they use our platform for partly trend analysis along with a lot of other tools, but specifically around that, it's around discovering trending products for product lines, for product innovation, and generally growth strategies as well. So they have a consumer insights team, and they'll actually build their own customized market within the beauty and health industry within the platform. So that would include brands such as Feel Unique, Cult Beauty, Ulta as well, Sephora, Target, just to name a few. So they can really create their own personalized market view, which is relevant to them and their business and their market leaders and potential partners and competitors. So from there, they usually look at the search volumes and the terms to see how certain products and categories are trending against the competition and the wider market. So to give you an example, they'll be looking at very specific product ingredients. such as within the hair health category, but also stuff that's a bit more fleeting and on trend, so press-on nails, for example. And they use those insights to feed directly into their own product strategy and make decisions on their retail partnerships. So focusing on up-and-coming brands, hero categories, and emerging consumer trends, or looking at what's also happening in other markets, other regions that they don't play in. And as a result, with the consumer trend data on hand, they really have some leverage to negotiate with their retail partners, just to get a better understanding of product positioning when they're working with the brands, and also just for the targeting on their website. So using it for also being able to put brands or products and highlight them on their pages, and using that data to really understand whether that would be something that pops on the page. And yeah, it's great. They're a great customer to work with. We did run a webinar with them last year on a very similar topic on trend spotting. So if you're interested, check out the webinar. It was with eMarketer, and they go into a bit more detail about the insights that they get from the health and beauty industry using Similarweb.
Fantastic. Thank you, Chloe. And thank you for bringing me back to the 80s with that press-on nail reference there. My favorite decade. We have a couple more questions here. One is, how can advertisers take advantage of Amazon Fresh online grocery market growing? And what kind of categories of business can benefit from advertising across Amazon Fresh?
Yeah, I can take that one. So I think when we talk about advertising, I think we really need to talk about kind of retail media. Hopefully I'm understanding the question correctly. But I think one of the big trends we're about to see from an ad landscape perspective in the next year is, and the next few years, is really just a massive shift towards that retail media investment. So I would encourage folks, as Amazon has kind of been a little bit slow, but is increasingly building out kind of a retail media business on the grocery side. Obviously, that's been a little more difficult for them, just given the kind of local nature of some of the products that they're offering, the fact that a lot of them need to be tied to a product being offered in a specific store nearby. But I would say, as you're thinking about kind of the advertising landscape with grocery, I would be really focused on keeping track of Amazon launching that increasing retail media opportunity, Instacart and other brands launching that increasing retail media opportunity. Just because I think, as we've seen, right, that retailer media spend, it can be really effective because it's so down funnel in a lot of cases, even if it's at a kind of, even if you're, have a retail media placement at a kind of, top of funnel search query that's appearing on search, right? That's still so much deeper in a user's kind of product and consideration journey than kind of traditional ad spend. So I would just be really focused on kind of keeping pace with some of those developments from a retail media perspective. And when there's opportunities to be a first mover, to understand as new ad placement real estate is being opened up on some of these retailers, to be kind of first mover there, I think is going to be a huge advantage for brands.
Great, thank you. And one last question. Can you talk about variations in consumer demand across CPG and retail?
Sure thing. Yeah, I can take that one as well. Obviously, it's a category with some level of seasonality. I think we see increasing seasonality as these kind of smaller D2C digital native players emerge. They have been much more savvy about kind of product launch cadences and, product variant launch cadences. We see that kind of increasing to some extent the seasonality. I think the variance in consumer demand is really interesting when we look at kind of that bifurcation between home care products and personal care products. And I think the personal care ecosystem has been a lot more sophisticated over the last few years, right? Just in terms of, iterating on products more quickly across the board. I think they felt a lot more of the squeeze of that kind of emergence of high end, both on retailers and on digital natives. And I think home care, what'll be really interesting is the kind of demand for those, higher end products, demand for kind of more specific products around ingredients and sustainability as we see. I think that demand is going to grow exponentially over the last few years. So I think that shift of consumer specificity that we've seen happen very quickly in personal care is going to start to happen at an increasingly rapid rate in the home care space as well. So that's really going to touch a lot of our paper products categories. as well as things like laundry detergent, I think is always going to be a big one given that there's so much investment in that space. So I think that is going to be the big shift we will see in the next year or so, is increasing demand for those more specific trendy products in that home care space, and taking that trend over from the personal care space.
Thank you. Chloe, Nathan, again, this was fantastic. Really appreciate you being here and sharing all of your knowledge with our audience. Before we wrap up, let me take a moment and tell everybody what's happening across eMarketer's media channels. We're going to have a team at Cannes. If you want to visit us there, please send us an email and we would love to meet up. You can also register for more upcoming live analyst and tech talk webinars at emarketer.com/webinars. On the audio side of the house, tune into Behind the Numbers. That's our daily podcast. We also have on Wednesdays now, Reimagining Retail podcast. And finally, please check out our newsletters. Keep an eye on your email. We're going to send the recording as well as the slides to today's presentation. You want to share it around with your colleagues and your peers. This was fantastic educational material. Share it, embrace it, and let's all start trend spotting. Chloe and Nathan, thank you again. And thank you to the entire team at Similarweb.